I wanted to create this video to give renters an idea of how they could buy a home with little to no money out of pocket. The title of the video is Buying Your First Home with No Money Out of Pocket. The statement that I get from a lot of first-time home buyers when they come to see me is that they saw that they could buy a home with zero down payment, which in their mind means that they don't have to come up with any money out of pocket to buy a home. Some of the terms that they hear is no money down program, zero down loans, down payment assistance, or first-time home buyer programs. But all these programs require the buyer to come up with closing costs. What I'm going to do in this video is I'm going to show you how you could buy a house and structure the loan and the purchase so that you don't have to come up with any money out of your pocket. I wanted to put a couple stats up here in the first slide that you could see, looking at where rentals have gone in the past 9 years. So from 2015 to 2024, average rents in the Chicagoland area have risen about 41%. And that translates into an annual increase of about 4.1%. If you look at rents in 2015, they were about $1,560 a month. And in 2024, those rentals increased to about $2,200 per month. So obviously the rental market has increased, but home values have also gone up as well, which is good. Moving to the second slide here, we talked about zero down loans, and I want to talk about 3 loans that you could possibly fit into. The first one is a VA loan. Second one is an FHA loan, and the third one is a conventional loan. Each one of them has particular guidelines that would fit a certain buyer criteria. For a VA loan, they could put zero money down, and that's what's nice about being a veteran. They offer the opportunity to buy a home with no money down and no monthly mortgage insurance. Now, there are closing costs that will have to be paid, but we'll get into that as to how we can go ahead and cover those. An FHA loan is catered toward individuals that have lower credit scores. So if your credit score is about 640, we could go ahead and qualify you for a FHA loan. We could also move you lower into the 580 category, but we're going to need you to have compensating factors in order to qualify for that type of loan. And Barrett does offer those products. A conventional loan would require you to put 3% down minimum. And this usually will cater to those with a higher credit score. The benefit of going with this is that there's no upfront mortgage insurance that you would incur if you did go the route of getting an FHA loan. So those are 3 different loan types that we could go ahead and look at to secure financing for you. Moving on to the next slide, there are some down payment assistance programs that would cover what you're going to look at needing for the FHA and the conventional mortgage. And those could come in the form of government grants, forgivable loans, state and local programs, and also community programs. All of these would be able to cover the down payment portion of what you're going to need to come up with. Moving to the next slide, I want to break down the closing costs that you're going to incur. So aside from coming up with that down payment, we're going to be looking at lender fees. And what makes up lender fees? That's the application, the origination, and then you're also going to have to pay for a credit report. So that's the first category of closing costs. Moving to the second category, you're looking at title fees. That would include a title search, insurance on the home, and any settlement charges. You're going to run a title search to ensure that when you take ownership of the property, that the previous owner did not have any outstanding liens against the property, so that that vendor could come after you to pay for, let's say, a roof that they put on, that the old owner put on. They can't come after you to go ahead and pay that bill. So when you buy it, you're going to get clear title, and that's why you need to go ahead and get title insurance. Escrow accounts are going to be set up for you as well. And the escrows are going to include your home insurance and your property tax. If you put less than 20% down, you're also going to look at mortgage insurance monthly payments on that. So that makes up your escrows. When you get your first mortgage statement, you're going to have all of that included in your mortgage payment so that you don't have to worry about paying the property tax and home insurance separate. The last category that we're looking at is third-party fees, and that makes up the appraisal, the home inspection if you want to go ahead and do a home inspection, and then recording fees. Covering your closing costs. So we have the down payment and closing costs. So how are we going to go ahead and structure your loan so that you could go ahead and buy this property with no money out of pocket? The first thing we could look at is having your family give you a gift. So if those closing costs are going to be about 3%, we could ask a family member to give you a gift for 3% of the purchase price, which would cover those fees. The second thing that we could do is we could go ahead and ask the seller to pay for your closing costs. Let's say the seller is looking at a $300,000 offer. Their list price is $300,000 and they would take $295,000. Well, that's a $5,000 negotiation that you took off the list price. Instead of coming down to $295,000, we could offer them full price at $300,000 and ask them for a $5,000 credit. That would still get them the $295,000 that they were looking for, and that's another way to go ahead and structure the loan. The last way that we could cover some of your closing costs is, as a lender, we could give you a lender credit, and that lender credit could be applied toward the closing costs. So between a family gift, seller credit, and lender credit, we are now able to cover your closing costs. So we have down payment assistance programs to cover your down payment, and these three items that could help with the closing costs. If we combine the strategies that we just talked about again, we're going to start with the down payment assistance. We're going to select the right loan program, whether it's VA, FHA, or conventional. We're going to negotiate with the seller to try to get seller contributions, and then we're going to consider trying to get lender credits from the lender. A real life example of what I'm looking at, hopefully that could help explain a little bit of what I'm talking about. Let's say Sarah had $500 in her savings. She thought that it would be impossible for her to go ahead and own a property, but she did have some pretty good credit scores. Her credit scores was about 680. So she would qualify for an FHA loan. She's kind of on the border for a conventional, but we could take a look at that program as well. But let's look how we could structure it. She found a state down payment program covering her 3.5% down. She negotiated with the seller to give her a credit of 3% off of her closing costs, and then her lender provided her $1,500 in credit for the remaining fees. The result is that Sarah bought a $200,000 home with zero money out of pocket. Her mortgage payment was less than her previous rent, and she built $15,000 in equity within the first year on this property due to appreciation, which was pretty good. So your next steps are, if you're interested in buying a house, we probably want to look at your credit. We want to research the local markets to see what school districts you like, what type of mortgage payment you could afford to pay so that you're not stretching yourself out with the home that you purchase. And then we want to get you pre-approved to make sure that before you go out and look at any properties, you're going to go ahead and get pre-approved for that loan amount so that when you do present an offer to the seller, they know that you can get the mortgage. I would like, if you could, to subscribe to my YouTube channel. I'm going to try to put out a little bit more content in the next couple of months that would discuss any issues or questions that you might have regarding mortgages or real estate. So if you can, go ahead and drop a message to me on any questions that you'd like me to address, and I'd be glad to go ahead and set that up or set up a video to explain the question that you have. Thank you.